All right, so today we're here with Blake Shultz with ARC Realty. Welcome in.
Man, thanks for having me. I'm excited.
So right now we are in New York City via Birmingham. Is that okay?
Yeah, I love it. Yeah, well, the rooftops there are just so nice. But you know, fall. Are there better fall places?
You know what? Let's go to Hawaii.
Let's go to Hawaii.
So now we're in Birmingham via Hawaii, or vice versa. And glad to have Blake here to talk a little about the general market in Birmingham, as well as investment property, because Blake does a lot of that, not only personally, but with a lot of his clients as well. So one question I got is now still a good time for somebody to buy a house?
Yeah, well, not giving a too generic realtor answer of it's always a good time, right? You know, we're in a very unique market right now where normally you see supply and demand work against each other. But right now, with the rate climate we're in and the inventory climate we're in, we're seeing not a lot of supply and demand still pretty slow for the year. And so we're seeing both of those stay pretty low to where we're in a very unique market that in the 11 years I've been doing this, I haven't seen this market before. It hasn't lasted that long, so I don't know, if we've been in it long enough to call it a full market cycle. But short answer, yes, because as a buyer, you've got more purchasing power in the sense of the ability. So we're still, quote, in a seller's market per inventory and days on market and market absorption, but to go in and not have the competition as a buyer that you've had in the past couple of years, while yes, you're paying at a higher rate for your mortgage, you can go in and you can get closing costs. You can negotiate off inspection, and you don't have to go in just throwing all your risk at the property, but you can retain some of that. So absolutely.
Gotcha. All right. So first time home buyers, then they're thinking, should I wait on mortgage rates? When is that? Is it 6 months? Is it 12 months? Is it 24 months? What do you say to those friends and family that are in that position?
Yeah, well, nobody knows, right? We don't have a crystal ball. All we can do is look at the projections that people like you give us and the nation's given us of saying, where do we think it's going to go? At the end of the day, I like to look at what the client's goal is. And so is this a 1-year house, a 5-year house, a 10-year house? What's the intent of this purchase? Is it an investment, right? And if it's a first-time home buyer looking for their first property and it's maybe a stepping stone house, maybe a 3 to 5 year house, then I like to dig in a little bit deeper and try to bring in that investment piece into it some by saying, well, if you have, if Birmingham is your home long term, would it make sense to buy this property and be strategic in the purchase to where maybe you don't sell it to go buy your second one to keep it as a rental? And maybe that's like the start of your rental portfolio. Because number one, that's the biggest way that people get into real estate investing, especially over the past 15 years as the market's only gone up, is the rental rates you can get based off what you purchased your house for, the returns are great. And if you've got the ability based off your purchasing power, debt to income, and all the stuff that y'all work with a buyer, if you've got that ability to hold on to it and build that long-term wealth by keeping that property, then that's something we'll take in consideration and advise on as we're looking for that first property.
Gotcha. All right, so same question. Somebody's already in their first home and they're thinking about buying the second home. They're sitting on a 3% rate because a great lender put them there. Should they wait, or is now the time to jump?
Yeah, so definitely dive in and look at the information in front of you. So the biggest thing is, you marry the house, date the rate, right? So you can always refinance as long as you can purchase for the price that you need to purchase for. So you can come in, get closing costs, you can negotiate on inspections because you don't have a lot of competition to buy that house. When rates come back down, price is going to go up, competition is going to go up, and it's going to get a lot harder. So as long as it fits your budget, I think it's good to explore going ahead and buying something and then refinancing if and when rates come down.
Yeah, so that's what I've been trying to tell everybody as well. I mean, the whole, date the rate and marry the house. I mean, I don't know who made that famous, but it's a great phrase. What we're telling our clients is go ahead and lock in the price of the house. You know what that is. That can't get worse. I mean, every prediction out there is that home value is going to continue to go up. So lock in the price of the house. We can always make an adjustment to the rate later on for refinancing if that makes sense at that time. But our fear is that when rates come back down, everybody that has been sitting on the sidelines waiting are going to all come out of the woodwork all at one time. If that does happen, we're going to be in multiple bidding wars again.
Yeah.
That gets very frustrating for every client. But in addition to that, that just increases the price of the house even more.
It does, and think about, and you know the numbers, but if that house price increases $30,000 or $40,000, that's somewhat significant on the monthly payment. But I would argue even more importantly than that, when you have that much competition going to buy, you lose all negotiating power and leverage, which can be tens of thousands of dollars of cash out of your pocket or out of your bank account, not necessarily spread out over 30 years on a monthly payment. So maybe it's $50, $100 a month difference, but the biggest difference is that cash up front and your leverage on being able to lose that negotiating ability, and that's huge. I would say the biggest thing in making sure that, hey, yes, we're going to buy this with the anticipation of refinancing, making sure that you've got to be comfortable, what if rates don't come down, right? And so we're not betting on a refinance later on. We're anticipating it, and that's great, but you can't put yourself in an uncomfortable position to buy now just in anticipation of that. And I relate that to buying an investment property. You don't buy just off appreciation, right? If you've got negative cash flow day one, but you think the area is appreciating, that's a bad investment in my opinion. Some people do it and make a lot more money than me, but it's a little more risk outside of my control in that.
Okay, so let's talk about investment properties, because it seems to be the buzzword. I know a lot of these hedge fund companies and Wall Street people are way smarter than I am, and they are all going into buying investment property just because it's the best hedge against inflation. Mm-hmm. So that being said, is now still a good time for the average person to be getting into that business?
Well, of course, yes, as the realtor answer. But again, I think it comes back to what your goals are, right? So, and what type of investment? So are we looking at a buy and hold? Are we looking at commercial, note investing, flipping? I think any one of them can be very successful. I think, and I made this mistake for way too long personally, is trying to be doing a little bit of everything. But in the short, yes, it can be if you know exactly what you're looking for, set your goals, and control those daily inputs on trying to get to it. Yeah. So bringing that investment piece kind of full circle back to where we started, we talked about, could someone buy their second house and keep their first house? And that's where I think it's really important to, instead of their emotional reaction is no, hey, let's really figure out and get all the information before we decide that, because I'm a huge proponent of building that wealth through keeping and buying investment property. So what does that look like on your end from the mortgage side?
You know, I think for a lot of our clients, keeping their first house as investment property is super smart. A lot of people feel like they can't qualify, though, for the next house. But there are ways to, number one, get some of the equity out, and number two, still qualify with offsetting those payments against some of the rents. So that's what I did on my first home.
So if I'm a second-time home buyer, I'm in my house, and I've got that kind of worry, and maybe I'm a school teacher, I'm making $50,000 to $80,000 a year, somewhere in that range, and my debt to income, because I know that's a big component of what y'all analyze, it just really doesn't make it work. Are you saying that if my mortgage is $1,000 a month on my house and I can rent it out for $1,200, then that debt doesn't really count towards that debt to income?
In a simple term, there is a calculation that we can use to give them credit for that $1,200 a month. Now, they're not going to get the full $1,200, but they are going to get something. It doesn't count the full $1,000 payment against them. I think that's really important for people to understand, because I think that is one of the safest, easiest ways of building real estate wealth. Mm-hmm. Hang on to that first house, turn it into a rental, and move on. Do it again. You can repeat.
What are the rules on that repeat? I couldn't repeat it every month, right? Are there time parameters that I have to wait to do that, or could I do it every month?
Well, yeah, when you sign a mortgage as a primary residence, you're saying that I do intend to live in that property. Now, there's no time frame. I mean, we all know of people who have moved in and only stayed there 1 month because they had conflicts with the neighbors or something wasn't right. But I think that starts getting a little suspect if that continues to happen. But there's really nothing that has a timeline to say how long I've got to stay in that house. But it needs to be reasonable because you did buy it as a primary residence, and you do not want to fraudulently say that I'm doing this and then quickly flip it over to an investment property. That's just not the right thing to do. But as long as you continue to retain those houses on your natural wave of moving up the size of the homes, I think that's a brilliant way of building wealth.
Yeah. Well, if you space it out too for 12 plus, maybe closer to 2 years, then hopefully you've got some appreciation in that first house, where if you also improve the house while you were there, you can almost do the Burr concept, right? Where you buy, you renovate, you rent, you refinance, then you repeat, right? So you've given some seasoning period or some time for appreciation, which we never bet on. But if it does happen naturally, then you can go in and maybe refi that first house, grab some of that equity, and use that as your down payment on your next one. So it's almost like you're recycling that first down payment instead of having to continually come up with chunks of cash.
Yeah, and I found that also when somebody's starting to do their first rental, I mean, the best thing to do is read, do their due diligence. What does this mean for them? Does it mean that if a pipe bursts at midnight, I'm going to have to take a phone call and go over there? It doesn't necessarily mean any of that. There's things like management companies that can handle a lot of those things. Of course, they come with a charge. Whether that makes sense for somebody or not really is going to depend on them. But the biggest thing that I want them to know is that owning investment real estate doesn't mean that you have to be a real estate tycoon. The average Joe, anybody, can really do it if they already own their first house. And if you don't own your first house, now might be the right time to do it.
Yeah. It's unique to see the barriers to entry to a business, where if you're starting your own business, depending on the industry, there can be a lot of barriers. But owning rental property can be a business as well. And the barriers to entry are really just up to you and the mortgage company. Working with an investor-friendly company, which y'all are, is huge, and being able to streamline that process and make it easy.
So Blake, tell us about one of your success stories with your clients.
Yeah, and this kind of follows the appreciation we've had in the past couple of years. So this is not like this will happen to you, but in a nutshell, $5,000 got him and his family into 3 different houses. That last house is now worth about $600,000. So, wow. So that's a good the caption for the post is $5,000 into a $600,000 house, right? But it started with the first house. That was the down payment into about a $150,000 house. It appreciated. During that appreciation, he pulled some equity, bought a second house, and so he took that initial $5,000. It's in that, pulled the equity out. He made the appreciation into the next one, sold both of those after they appreciated even more, and all the cash he had from that appreciation was the down payment on the $600,000. So out of his pocket over that whole span, maybe about 5 years, was $5,000. Got him and his family into a $600,000 house. So that's just the power of real estate, and it's so unique to the industry, right?
So I think one of the things I'd say to people wanting to get into the real estate market is, that first home could be your first rental property eventually. You can get in, you don't have to have 20% down. You could get in with 3%, 5% down, depending on where it is. Could be 0 down, and that could be this person's first intro into being a real estate investor.
Yeah, Ben, that's so good, because that's where y'all excel, about having that information available to clients and saying, hey, let's not pull the trigger, make a decision until we get you all this information, because I think that's a huge misconception on people buying their primary, but also in the investor space of, I've got to have 20%, or some people got to have 25%, and a lot of times that's not the case, like you just said, and it's not an immediate gratification. Maybe it's a 2-year play or a 1-year play, but that action you take today is going to pay off. And real estate's a long-term game. It's building wealth. It's not you hear all the success stories overnight, I made $1 million. Like that's not reality, right? And so I think y'all do a great job on the education of that, to say you don't have to have 6 figures to get into real estate investing.
All right, so Blake, whether somebody's buying their first house or 10th house, their primary residence or their investment property, where should somebody start?
Yeah, always start with a bank, right? So put a plan together, what direction, what's the goal of the home search. But we always say, once you find a good realtor, then find a good lender, right? And know your numbers and know what your purchasing power is, what's comfortable, not just what you're pre-approved for, but what fits your budget personally. And then we go look at houses. So for me and my team, we don't show houses to a client until they are pre-approved, right? Because at the end of the day, it can be a waste of their time, because we go find the perfect house for them and then we plug them into a great lender. Well, if they're not approved, then we just wasted a bunch of time, and maybe they blame their realtor, right? And that just makes everyone look bad. So starting with a plan, always start with the numbers, and then we go look at houses.
So what I have found is that oftentimes people will go out and they'll start with the home search, and then they'll want to build a plan around what they find instead of building the plan first and then working backwards.
Yeah, that's a dangerous game to play, because that's when you're trying to make it fit your budget instead of having your budget and having something fit it, right? And that's just a dangerous.
Yes, and I think then the home purchase turns into much more of an emotional decision rather than a rational one. Once somebody goes in there and they can visualize, their couches in that room environment, if it turns out they can't afford that house, they're really hurt and upset about it.
Yep.
It would have been better to know the numbers before they even go and look, and that way they are looking at the right houses, and they know that their furniture will then fit in just fine in that particular house.
Yeah, and that's why on the lending side and realtor side, before we look at any houses, we have a buyer meeting saying, what are the numbers, what did MortgageBanc and Ben tell you, and then all the criteria of the house stuff. And so we have all that predetermined. And so if they send me something outside of that checkbox that we made, it's not a hard no, but let's have a discussion of, did you just get a bunch of money I don't know about? Or did we change the budget? Or did we change the criteria? If so, that's great, let's go. But if not, what are we doing, right?
All right, Blake, so you've been doing this for a while. You've got great success. What do you think is the difference between a great realtor and the average realtor?
Yeah, I think a great realtor is proactive on their activities, on market knowledge, education, just continuing to be forefront in front of their clients and serving, and just being just a servant to their clients and making sure they're providing what they need. I think the average agent just kind of lets the day-to-day go by and be a little more reactive in what's thrown at them, and that creates a pretty big separation. All right, so I'm going to flip this a little bit and ask you a question, but what do you see buyers making the biggest mistake in the process?
I would say they go out and buy a house first, and then they call the lender and say, hey, I need you to figure out how to get me qualified for it. If they started with the lending side first, we can give them a budget and help them know their numbers. They'll know exactly what they're getting into as they start their home search. They just tend to do it backwards.
Yeah. Oh, that's so good. I see it all the time.
All right, Blake, last question I got for you. What's the weirdest thing you've ever seen in a showing?
We see some weird stuff. Probably the house with 15 to 18 pet raccoons. Not potty trained. They had eaten entrance holes and peeled the brick away from the house, and there's just passageways, just disgusting.
Did they come with the house?
They did. It was actually one I bought and flipped, and they vacated after I stopped feeding them.
Nice.
Remember, my name's Blake. I'm a realtor here in Birmingham. If you're looking to get into your first home, your 10th home, or your first investment, give me a call.
So, my name's Ben. I'm here in Birmingham, Alabama. If you're considering buying a house, whether that's your first, your 10th, investment property, your primary residence, whether that's next month, next year, go ahead and give me a call. Let's put together a plan.